right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So I got the bias chart out, and we're going to get started going through all of our majors, as we always do at this time in the morning. If you're one of the newer listeners, and we do actually follow a bit of a protocol around here. First half an hour, we just usually talk about whatever's really on our minds, type of thing. Sometimes I have something that I've really got to get off my chest, and we call it the morning rant, if you will. And then the next half an hour we go through the analysis of all the majors, and then from there I usually answer questions. And after that, it's usually covering live any live North American news that's coming out at the 8:30 a.m. Eastern mark. We are into the portion of the day where we start our analysis of all the majors, and people tune in for certain parts of the Morning Edge and do over the years because they rearrange their morning schedule of getting ready, or around the morning analysis, if you will. Or sometimes people are just rushing to get their kids out to school or head out to the office, or and have a certain amount of time. So we try to follow the same schedule every day, so we don't surprise anybody. Anyway, so with the euro dollar, okay, and you'll notice where we're at. And yesterday we had broken through this trend line support. Okay, we were actually right through here, and we broke down. And all we did is we broke down, couldn't follow through. But we basically we held. We had written down support of being 113. Okay, right here. We wrote down, we were right here, and we wrote down support being 113. We came through that 113 support, took out some stops to the 90 level, or to the 80 level really, and then bounced back. And you can see we've just been channeling ever since. The euro. If you go back to 2 weeks ago, so here we are, 2 weeks ago, we're down here. As I had been mentioning for the last 2 weeks, I wanted to get short the euro dollar as we approach 1320 or 1330. That's a 38% retracement, and I've been waiting patiently. Finally, on Friday of last week, we busted a move to the 38% retracement, and I've been short ever since Friday. Okay. I got my cost average is 113.24 currently. I'm up 8 pips, but I've been sitting in this stupid thing since Friday. It's worked exactly how I had imagined it worked 2 weeks ago. We finally got there. But my biggest issue is, and my biggest gripe at the moment, is it hasn't moved where where I thought it was going to move. I thought it was going to get up here earlier last week, and I thought we'd already be back down here ahead of the FOMC. Now, that doesn't necessarily mean we can't get down there ahead of the FOMC, because, like I said, let's just imagine we have a stronger retail sales number today. If we have a stronger retail sales number today, maybe that's the catalyst that drives us down to 112, or maybe 112.50. Tomorrow we have CPI. We have inflation data on the consumer level. Maybe that comes in a little stronger than had anticipated and gets the euro dollar down to 112 ahead of the Fed meeting. They're all possibilities. They're not guarantees by any stretch of the means. But if you've been here the last 2 weeks, the euro has moved basically exactly how I'd hoped and I'd wanted. And as I told you 2 weeks ago how I was going to play the euro dollar, I'm doing it as we speak. And one of the things I always pride myself on is telling you guys how I'm going to do it ahead of it happening. Obviously it doesn't always play out the way that I assume it's going to happen, but that's part of trading. You anticipate a move to happen. If it happens, you play in. You plan your trades, and then trade your plan. And sometimes you plan your trade and then the market doesn't do anything that you thought it would do, and that's fine as well. It happens to all of us. But hopefully it gives you a better understanding and better idea as a trader on how to approach the market as an independent. We and hopefully my um, disciplinary approach to the markets helps you in turn become a more disciplined trader as well. So hopefully you've been, a little bit more patient waiting for the euro dollar to get up to these levels. Now, like I said, the question is, what are we going to do from here? I'm just hoping that it's going to drift down towards 112 ahead of Thursday, but that's not a guarantee. I mean, the euro dollar could very easily be trading at 114, and I can guarantee you this: if we get up towards 114, I will not be short the euro dollar going into the FOMC. I can guarantee you that. I'm not going to go into the FOMC hoping that we see some sort of move. You know, so that's it. Anyway, here we are today. So the good news is we have a, I think, pretty good at this point, um, pretty good boundaries of where we're going. Okay, or at least support and resistance currently. Obviously support is going to be right down here through these lows, which is going to be at 112.80. Okay, 112.80 is going to be support. On a stronger um, uh, uh, retail sales number, we could quite possibly break through that hourly support. If we do that, that's probably going to give us a little bit of a move down towards the 112.50 to 30, this zone. I drew this out like a couple of days ago, so it's still, I think, a big, whoops, I didn't want to just grab the whole thing. I want to grab the tip of it. Um, this is all like, I think, a good buy zone if we get down here, for those of you that actually want to be short the dollar going into the FOMC. I would think if we got down towards this level, like let's say we broke through here, this is going to be a good area to be, on the long side, looking for a move higher. All right. I'm just hoping we get down here and stabilize over the course of the next couple of days, like right here. Like I said, I hope it'd be nice if we were right here ahead of the FOMC, because once the FOMC comes out, if we're gonna do this, either or. Um, so I'm hoping that's what happens, but just because I hope that's what's going to happen doesn't mean it's going to happen. All right, so resistance today, obviously is 113.50. This could very easily be challenged. Okay, we have this broken trend line here. You can see it just like this. All right, we could go up and try to re-challenge the trend line, those highs. So 113.75 is going to be a really key resistance today. Okay, 113.75. Okay, that's resistance. So the range environment, as you all know. All right, let's go look at the cable. Now, I've been sitting in the pound short since last week as well. My cost average is 154.43. I'm only up 16 pips. It's very, very frustrating pair. As you all know, I'm going to be filming. If you don't know this, I'm going to let you all know. I will be YouTubing a video of me discus throwing a laptop, and that's paid as a tribute to my disdain of trading the pound dollar. I I think to the core of my being, really hate trading the pound, and somehow I get sucked into trading the pound, and every time I do that, I just want to chuck my computer out the window. So what I'm going to do is I will be discus throwing a laptop. I've been planning on doing it the last couple of weeks, but due to birthdays, and my wife and I's 12-year anniversary this weekend, the unfortunate passing of my grandfather this weekend, has prevented me from discus throwing my laptop. But don't worry, it's happening. My laptop is sitting 2 feet behind me, and it's prepared for a discus throw. So be on the lookout for that video coming up in the next probably in the next week or two. All right. Uh, so as far as the cable goes, what do we do with this? I don't know. I really don't know. I mean, like I said, I'm short, but it's a very frustrating trade. Very frustrating trade. Um, I mean, we're not even respecting any fib levels on the way down, which is probably what makes it even more frustrating. So obviously, the this resistance here is at 154. I can write down 154.70. But even if we break above these highs, this is the one thing that I said last week, and I'm going to reiterate. Okay, even if we break these highs here, you can't get sucked into being long the cable because just above it is the 50% retracement. And you know what will happen? Because enough time has passed now where you see those highs, and let's say that the pound races up and it looks like it's going to break out. A lot of traders are going to end up getting long here, and then what they're going to fail to see is that 50% retracement of this move from the high to the low. Okay, and they're going to try to get long right here at the 50% retracement. Is just going to roll over. It's going to hit 155 and roll. That would be my best guess if we break these highs. So what we do have to obviously look at right now are the highs that come in around 154.75. Okay, but even beyond that, 154.75, 155 is resistance. We are in a range environment, and support for the cable. I mean, yesterday the cable looked like we're going to go into a deep and utter free fall, through that support, and then all of a sudden it just pops right back up above 154. It's like it's so frustrating. Yesterday, I was just watching and going, oh, God, so annoying. Anyway, support today will be 153.75. Okay. Let's go take a look at the Swissy. So I am long the dollar Swiss. My cost average is 97.0. Where is it? Oh 06. My cost average right now on the Swissy. Um, I on Friday we were here Thursday or Friday, and I was waiting for a dip down to this support, right? Spike low, spike high, and I wasn't patient enough. I actually started getting in as it was dropping into the teens, and then I averaged in, bought some more at 86. So my cost average is at 96.06. And just so you all know, and I'll reiterate, my dollar longs right now are all relatively small positions. They're all like 1/4 size. I don't want to be, well, you add them all together and you've got a, decent position. So I'm short the euro, short the cable, long the Swissy, long the Canadian, short the Kiwi as of last night, right at current prices. But you know they're all small positions, but you add them all together, and it's a good sized position when you add them all together. But I am long some dollar Swiss, and like right now I'm out of the money 17 pips, and I'm sitting in it. It's to me it's not a big deal, because ultimately, and you guys know this, the Swissy, this is the one currency that in the event that the Fed shocks the market and raises rates, I want to be long the dollar Swiss. As that divergent monetary policy continues, and and as you know, 30% of the market is pricing in a rate hike. The majority is not. So if you if the Fed does hike on Thursday, and the RB and the Swiss National Bank continues to keep rates at negative three-quarter basis point, that's just going to widen that policy gap even further. Which, as you guys know, and I'll reiterate my game plan. If we break above this yellow trend line, this is a multi-decade trend line. Break above this trend line, it really comes in at 98, 98.50, and then 99 cents. I'm going to add on a break above 98.50, and if we get above 99 cents, I'll probably add a little bit more. And then if we break above 102.50, I just move all my stops to break even, and then over the next couple of months, I'll be targeting 110 to 120. So that's my game plan with the dollar Swiss. So and you guys have to realize how relentlessly strong the Swiss pairs are, how ridiculously weak the Swiss franc is. Now, I didn't play it too well the last time we were up here when I had my position from 94 cents. I didn't sell it all at 99 cents, and I sat through all this and then finally got out like here. And I played it very poorly because I took some profits through here, but all in all, after sitting through this nightmare scenario, and that's when the Dow was down 1,000 points that one morning, you know, I'm a little frustrated that I didn't hang on to everything, which I should have, obviously in retrospect. But this trend line here that comes in at like 98.50, if this gets taken out, guys, that's going to be a huge, huge breakout. It's no guarantee that it's going to happen, but I want to be there for it. This is one of those that, as I've mentioned to you for the last couple of weeks, there are, throughout the course of a year, there's usually a couple of trades that really put me over the top for my trading every year. It's like a lot of years it's been like the pound Aussie long, or the pound Canadian long. Last year was a really good one. Well, actually last year was all just playing the dollar long when the dollar index was at 82. 82 was like, and that was like that was like my home run. But the previous years are like a lot of the cross rates. This year, towards the end of the year, the one that's on my radar is really this dollar Swiss. If the Fed raises rates unexpectedly early, and the Fed can, like, let's say the Fed embarks on a quarter basis point every meeting because the economy can take that, you'll see this dollar Swiss trading up at 110, by the end of the year. And I want to make sure I'm in it. This is one that could really put myself over the top for the year. And same with, you guys too, obviously if it works out. But this is one that I want to be long. And so I'm hoping the dollar actually can firm up a little bit between now and Thursday. That's what my hope is. Okay, anyway, let's go in intraday. So here's the Swissy. Obviously, we have support. Like yesterday, I think we went as low as 96.66 was the support. We wrote down 96.70. The lows came in at 72. So no, we had 69 over here. So yeah, I mean, 96.70 is support. I mean, you guys, it's ridiculous. So if you don't know this, I work out of my home office. I stopped working out of an office because I was sick of getting up at 2 o'clock in the morning and taking a shower, putting business attire on, and going to an office at 2 o'clock in the morning. I just wasn't having it anymore. So I bought a house that I could have a nice home office in, and so I work out of my home office. And I have dogs, and I have a horse, a dog that's literally a horse that sits underneath my feet in the mornings, and I have nowhere to put my feet because the horse sits below my feet. And I mean, it's the most frustrating thing in the world. Like I, sometimes I have to sit in an Indian position in the mornings, to uh, so frustrating. All right, resistance, 97.20. So it's going to be some resistance there. Pretty tight range right now. Okay, and we're in a range environment, but I'll tell you guys, this Swissy, if it breaks higher, could be a big one. All right, let's go over to the yen. Okay, here's the yen. Mirko says my dad's Indian. Great. Does he sit Indian style? Because that's how I sit at my desk, Indian style, in my chair. So here's the dollar yen, and as you guys know, I've kept this for the last several weeks with a bearish trend because as we slip through this trend line, it's been bearish. Now we're just in a consolidation, and I don't know where the lower end of this trend line is going to come into place, but into play. But the reason why the yen's weaker is because the BOJ didn't act, and so I think people were worried the BOJ could quite possibly embark on more quantitative easing, and so that when the BOJ did nothing, I think yen longs came back in, and that's what's creating the dollar yen weakness. Now the question is with the yen is how low are we going to go here? And this number, it's such a fast move, so that spike low right there. Some brokers have different prices. It's hard to measure off of that number. Okay, but as you can see here, the next real big support is going to be at 119.15. Um, and any move back up to 120 is probably going to find some sellers now. Okay, right through here. So any move back up to 120, you're going to find some sellers. But support is 119. Let's just call it 119.15 now. I mean, I don't have any dollar yen exposure. I'm still short some pound yen. As frustrating as it has been to be in that trade, it's obviously it's grinding lower now, finally. But if the dollar yen got back up to 119.20, that probably wouldn't be a bad place to be on the short side of the dollar yen. All right, let's go over to the Canadian. So here's the Canadian, and I am long some dollar Canadian. Okay, I'm up 22 pips right now. I'm long the Aussie Canadian. I'm up 116 pips. The Aussie Canadian and Aussie New Zealand, as you guys know, for the last couple of weeks, those positions are they are stronger or bigger size positions, and this dollar Canadian is very tight in this range. 132 is going to be support and resistance now. I mean, we're in the apex of this triangle, really. You know, we're we could quite possibly break out ahead of the FOMC here, but we should find some support down here. We should find some support right here, right where we're at actually. But you can see right through here. It's like you have to ask yourself, this question: do you get long right here? Because when I bought the dollar Canadian, I waited for the dip through this trend line and then got long, right, last week. And so I think while it's above like 132, it's probably going to be very well supported, but we could dip to 132 today, Obviously, resistance is at 133 and a quarter, as it was yesterday, and we are still in a bullish trend. Whoops, we're still in a bullish trend. It's obviously very bullish. The Canadians work just has it just as we have anticipated the last couple of months. I mean, it's worked out really well. You guys know when we were down here at 124, and we all got long here at 124 and change. Said, hey, we're going to go to 134 because it's 161% extension of this range. We're going to go to 134, back off to 131, and then continue on. We went to 134, 133 and a half. We backed off to 131.50, and now we've been consolidating really tight. So, and it's prepared for a continuation. We just haven't seen it yet. Okay, it's been very, very tight. All right, but still a very bullish trend. I think it stays bullish as long as we're above like 131.80 or so. Okay, so when I get back, we're going to do the Kiwi, the Aussie, the dollar index. I don't think the Nordic currencies are really moving anywhere. No, they're not doing anything. There's some comments from the Riksbank a little earlier, but the peso's pretty quiet as well. So we'll do the Aussie, the Kiwi, the dollar index when we get back, and then I'll start your questions before the retail sales numbers. So don't go anywhere. Be right back. Thanks, everybody. All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. Hold on really quick. Okay, so still very quiet conditions. Actually, the euro's firming up a little bit, but the pound looks a little weaker, and just a lot of chop really ahead of the retail sales numbers, which are going to be out in about 28 minutes. So that means we need to cook through the rest of these. Let's go over to the Kiwi. So here's the Kiwi dollar. I've been waiting for this move up to 63.50. I just, I know a lot of people are like, we're going to fill this gap up here in the 80s. And I remember the gap that you see on my chart, and maybe some of yours as well, is just due to the rollover period. During the RBNZ, it happens right at the rollover period for a lot of us in North America. But if you're a European trader, you don't see a gap like that. Right. So I don't really, the gaps that happen during the rollover period, I don't put a lot of thought into, like, oh, we're going to fill those gaps. Those aren't the types of gaps that you are filled. The ones that are usually filled are the ones over the weekend that everybody deals with. 63.50, as I mentioned yesterday, it is key resistance. The question is, do we even get up there? And that's the question I had yesterday. That's why I shorted the Kiwi dollar yesterday when we got up here, which would have been, I think, right here. Yesterday evening, yeah, right here. So I got short. I did not close out of my position. I just decided to stay short the Kiwi. But 63.50 is going to be resistance. Okay, is still in a very bearish trend, and support is now at 63 cents. Okay, but really key support comes down at 62.40, as you all know. But we're not dealing with that obviously today. Right now we're dealing with just 63 cents as being support. Aussie dollar. Now the Aussie on the flip side has been neutralized. Now that we're above 74 cents, as you all know. Now here's a problem that I see with the Aussie. We got above 71 cents. We have this, I'll draw it out for you guys again, this inverse head and shoulder pattern, neckline's right here, that goes through here, target's up here. But what's happening right now is we're capped at this downsloping trend line. You can see through it goes all the way back up through there. Okay. This downsloping trend line, I'll have to go to a 4-hour chart. You can really see it. maybe even a daily chart. Okay, it's really a 4-hour chart. So all the way down through here. Uh, okay, you can see where we're at, and so I guess the point I'm trying to make here is, if the Aussie actually breaks these highs, that's going to be really bullish. We may target 72.50, but we could actually get higher than that, I would think. Um, so 71, what are the highs right here? 71.65. 71.65 would be the key resistance for the Aussie. 71.65. It is neutral right now. Okay. It is neutral. It got neutralized when we got above 71 cents. So we could still be very much range bound, but yeah, if we get above the 71.65, I could very easily start turning bullish. All right. I know a lot of you are like, well, how about the RBNZ yesterday? They were a little dovish. Yes, they were, but people will look ahead of, ahead, just like, they've been doing with the dollar as well. So if they, feel that, yes, they're slightly dovish, but realistically, the RBA is going to keep rates at 2% and might do it indefinitely, then, that could be enough to firm up the Aussie for a while. Anyway, support is that spike low from not yesterday, but down here, which would be 70.60. Well, actually, you know what? I, for today, I take that back. I think we should really focus on 71 cents because you can see how we spiked down here at 71 cents. Okay, we held it. Um, if we break through that, that might open a little trap door in the Aussie. Okay, so let's just keep an eye on it there. Okay, let's go over to we were looking at the dollar yesterday. This is the FXCM dollar intraday. We came down and we were just kind of paused on support. Whoops, don't want to do that. We kind of paused on support. We broke, and as a 38% retracement, you can see it right here as a 38% retracement. We slightly broke lower, okay, but the dollar index. See, the dollar index is really just holding right on key support, which we had it at 95 yesterday, but we'll write 94.95 and resistance at 95.70. Same. Okay. Except we're going to go 94.95. I think yesterday we wrote down 95 cents and 95.70. And we are range bound. Okay. Now, real quick, just we'll flip through them really fast. I don't think there's anything happening here, but I just want to double check. So here's the peso. Peso's just sitting on support, guys. Actually, let's do something really fast. For those of you that can trade the peso, I don't trade it, but if you do, I mean, why not go long the peso here? I'm playing devil's advocate right now because I can't trade it. But why not go long the not devil's advocate? I'm just trying to play like unbiased is what I meant to say. It's so early in the morning still. It's still 5 o'clock. You see, it's 5 o'clock in the morning. Yes. Um, getting long down here on the peso. I mean, if you as long as you put your stops below like 16.65, right? So I mean, it's still in a very, very bullish trend. So 16.65. Resistance is at 17. You guys know that. We have these numbers memorized, guys. It's right here. Okay. So I mean, we're in a bullish trend. Why don't you, for those of you that can trade the peso, why don't you get long, put your stops below 16.65, play in the direction of this trend for now. You know what I mean? If you're looking for something to do, that's an idea. Um, okay. Let's go into, that was the peso. Just real quick, we'll look at the Norwegian krona. Bullish, but just sitting, getting towards the lower end of our range, but not quite there yet. Swedish krona. Yeah, after Fridays, I think Sweden came in with what? It was like weaker GDP, weaker inflation data. I forget what there was like a double whammy that knocked it down on Friday, but it's just kind of sitting. But really, I mean, there's nothing really to do here either. Not a lot. Not a lot, not a lot, not a lot. Okay, let's go into some of your questions now. So,